Hi, I'm Linda Lovie with Lovie Wealth Management, bringing you 20 plus years of experience in the industry. What I'm going to share with you today is how a financial plan works. The advantage of a financial plan is it helps eliminate a bunch of different surprises. So you can plan for how much cash reserves you should have set aside. You can plan for your retirement funding. You can also look at college education. You can look at accumulation goals, such as the down payment for a home, as well as your disability insurance and life insurance, and also asset allocation. An asset allocation helps reduce the risk in your portfolio, although it does not protect you from loss of principal. With that being said, here's how a financial plan works. This line here indicates how much money, while this line here indicates the years of your life. So when you first start working, your income may look like this and slowly go up as you gain more skills, and after a while it's going to level off. If this is the way your income line looks like, what do you think your expense line might look like? Typically, for most people, it's less, and over the course of time, it crosses over and becomes more because of inflation. It's one of the areas that's most often missed. So we need to plan for that, and the financial plan can also take that into account. This gap here is what we call your discretionary. In other words, your ability to save. So while we're working, you should be putting money aside into different accounts. So let's say here we're going to retire at 62. And again, we just put the date in when you want to retire in the plan, and it calculates out and says, okay, based on your income, your expenses, and your lifeline, this is how much money you need to have saved up for your different goals. Do you think that would be a good number to know? By knowing what these numbers are, you can now plan today to get to those goals. All right, so now the first thing we can do on the plan, because most people do not have enough money set aside, is we can look at the different options we can do to get there. First one is save more. So can we create a budget and figure out a way to put more money into these accounts over here? So the accounts that I'm referring to, if you work for a company, for example, could be a 401k, 403b, etc. Or you could have your own traditional IRA or a Roth IRA. You can also use life insurance, the cash value, as a way to save. You can also have pensions or other type of investments. So that's option one. So a lot of times we can reach these goals through a combination of several different strategies. So here's number one. Second number one is look at your rate of return. Are these assets over here earning as much as they can be earning for you? In other words, if you have money in a checking or savings account, you're probably not going to get there. That's good for your cash reserves, but not for other long-term investments. So we can look at placing those investments to get a better return for you. 3, work longer. So let's say instead of retiring at 62, we retire at 65. Now, by working longer, you're actually saving 3 more years and adding to these accounts, and then you're taking away from these accounts 3 years less. So that might possibly serve the goal. All right, the fourth one is to live on less. My goal is to help you not to have to do that, because I don't want you to have to give up your lifestyle. So by combination of all these, we can play back and forth and figure out what we need to do now to be able to take care of you for the future. So if you're interested in more information, give me a call at 775-544-4714. You can also visit my website for more examples like this at www.llovie.com. Thank you very much.